Hey everyone, welcome back to Corporate Decoder, the place where we uncover the hidden stories behind company filings. Today, we're diving into Technology Solutions' latest report, and let's just say things got a little interesting with some new funding deals. We've got a lot to unpack, so buckle up. And before we dive deep, if you are finding this kind of nonsense corporate analysis helpful, do us a favor and hit that subscribe button. We also have a fantastic Discord community where we break down these reports even further. The link is in the description below. Alright, so what we have here is a Form 8, which is basically a report for significant events that happen at a company. Think of it as a company's way of saying, hey, something important just went down and you need to know about it. And in this case, ConnectM Technology Solutions has been busy raising some serious cash. First up, on the 7th of January 2026, ConnectM inked a deal with GS Capital Partners LLC. This is a securities purchase agreement, which is a fancy way of saying they agreed to sell something for money. What they sold was in the form of convertible notes with a potential to reach a total of $1,250,000. A convertible note is like a loan that can turn into company stock later on, and it is a common way for companies, especially smaller ones, to get funding. Digging a bit deeper into this deal, the company actually issued an initial note to GS Capital for $228,000. Now here is where it gets a little technical, but stay with me. There was an original issue discount of $20,000, meaning GS Capital only paid $208,000 for this $228,000. Note, it is like buying something at a discount. And that difference is a way to sweeten the deal for the investor. As a bonus for agreeing to this deal, ConnectM also handed over 150,000 shares of its own stock to GS Capital. These are called commitment shares, sort of like a thank you gift for signing on the dotted line. The note itself carries a one-time interest charge of 14% on the principal amount. This interest was added to the loan right away, making the total owed even higher. This note matures in 1 year, on the 7th of January 2027. The company has to make 6 installment payments for the principal, starting about 6 months after the note was issued, and then every month after that, any remaining amount is due on the maturity date. They can also pay it off early without any penalty. If they miss a payment, the interest jumps up to a much higher rate, at least 24% or whatever the law allows. Now, the really interesting part about these convertible notes is that GS Capital can convert them into company stock. This can happen if something goes wrong, like an event of default. The initial price for this conversion is set at $0.4 per share. However, if there is a serious problem and the company doesn't fix it, GS Capital can convert at a much lower price, specifically 75% of the company's lowest stock price in the 10 days before they decide to convert. This really protects the investor and puts pressure on the company to perform. But ConnectM wasn't done there. Just a couple of weeks later, on the 20th of January 2026, they made another deal. This time with Laborers Fund II, LP again. It's a securities purchase agreement for a senior unsecured convertible promissory note. Laborers Fund paid $206,500 for this note. And on top of that, ConnectM issued another 75,000 shares of its common stock as commitment shares. This Laborers note has a principal amount of $227,150, but with a $20,650 discount, so Laborers Fund paid less for it, to raise a 10% interest charge, which equals $22,715, and that was also added to the principal. This note also matures in 12 months and carries a high default interest rate if payments are missed. What is unique here is that Laborers Fund can convert the note into stock in a few scenarios. If there is an event of default, if ConnectM misses a payment, or even just 180 days after the note was issued. The conversion price is linked to the company's stock price, but it is a bit more flexible, ranging from 95% to 98% of the stock price depending on how long it has been since issuance. Here is another interesting kicker for this Laborers note. If ConnectM or its subsidiaries get cash from certain sources, Laborers Fund can demand up to 25% of that cash to pay off the note. If ConnectM doesn't do this, it is considered an event of default. The note also stops ConnectM from doing certain types of deals, and if they mess up, they owe liquidated damages. This shows how much control investors are trying to get to protect their money. And just when you thought that was it, on the 22nd of January 2026, ConnectM made a third deal, this time with Accession Fund LLC. You guessed it, another securities purchase agreement for a senior unsecured convertible promissory note. Accession Fund paid $225,000 for this note, and ConnectM threw in another 50,000 shares of common stock as commitment shares. The Accession note has a principal amount of $250,000, but with a $25,000 discount, it has a 12% interest charge, totaling $30,000, which was also added to the principal at issuance. This note also matures in 12 months and has a hefty default interest rate. For this one, Accession Fund can convert the note into stock if there is an event of default, A missed payment or after 180 days, the conversion price is really attractive for Auctus Fund, set at 65% of the lowest stock price in the 15 days before they convert. That is a significant discount and a strong incentive to convert if the stock price dips. This note also has amortization payments, meaning ConnectM has to start paying back some of the principal within 30 days of the deal closing. So what we're seeing here is ConnectM Technology Solutions essentially taking on a lot of debt that can turn into stock, and they're giving away a good chunk of company shares as part of these deals. In total, they've issued 150,000 shares to GS Capital, 75,000 to Labour's Fund, and 50,000 to Auctus Fund. That is a total of 275,000 shares given away just as commitment shares, on top of the shares that could come from converting these notes. These shares were issued without being publicly registered, meaning ConnectM relied on exemptions under securities laws, specifically Section 4 Add 2 of the Securities Act of 1933. This is common for private placements like these, where the company believes it is dealing with sophisticated investors who don't need the full protections of a public offering. And to wrap up the filing, they've listed all the actual agreements and the notes themselves as exhibits. These are the full legal documents that lay out all the nitty-gritty details of these deals. You can find them filed with the SEC now. Let's put on our investor hats and look at the bigger picture here. ConnectM Technology Solutions is clearly in a growth phase, needing capital to fuel its operations or expansion. They've managed to secure funding, which is a positive sign, but the terms of these convertible notes are quite aggressive. The significant discounts, the ability for investors to convert into stock at potentially very low prices, and the high default interest rates all suggest that these investors believe ConnectM is a high-risk, high-reward situation. The issuance of so many commitment shares upfront also dilutes existing shareholders' ownership. Dilution means that each existing share represents a smaller piece of the company. This is a common trade, off when raising capital through convertible notes, but it is something current shareholders need to be very aware of. The company's strategy here seems to be relying on future success to make these notes manageable. If their stock price goes up significantly, the conversion of these notes might be less impactful, or they might be able to refinance this debt. However, if the stock price falters, these notes could become a substantial burden, and a significant portion of the company could end up in the hands of these new investors at very favorable terms for them. What are the risks? Well, the most immediate risk is the potential for massive dilution if the stock price doesn't perform. Another risk is that the company might be struggling more than it lets on, hence the need for such investor. Friendly terms, the complexity of these agreements also means there are plenty of opportunities for missteps or disputes down the line. On the opportunity side, if ConnectM's technology or market position takes off, these deals could prove to be a necessary stepping stone to significant growth. The infusion of capital, even with these terms, allows them to potentially execute their business plan. In conclusion, ConnectM Technology Solutions is making bold moves to secure funding, but it comes at a steep price for existing shareholders. These deals highlight a company that is either very confident in its future growth or facing significant financial pressure. Investors need to watch closely how ConnectM uses this capital and whether its stock performance can justify these terms. Alright, that is our breakdown of ConnectM Technology Solutions' latest filing. What is your take on these aggressive funding deals and what they signal for the company's future? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives into the world of corporate finance. Don't forget to check out the Discord in the description for more exclusive content. Thanks for watching, and we'll see you next time.